Well, hello everyone. Welcome to today's market snapshot. Now, as we look across the markets, yesterday we did have a bit of excitement. Yesterday afternoon, we had some Fed speaking. We had Powell testifying in front of Congress, as well as Janet Yellen, the Treasury Secretary out of the US. Now, she has warned that the US risks running out of money by October the 18th, as well as Senate Republicans attempting to block attempts to increase the borrowing limit. Now, what that means is that on October the 18th, she is predicting that the Federal Reserve, that the US government will run out of money to print. As we know that they are, with the increased stimulus measures, with the amount of money that they are printing, to put it in simple terms, with that, the more money you print, the more debt you create, and there is a debt ceiling in America to ensure that debts in the country do not get too high. And what she is predicting is that by October the 18th, we will reach the debt limit in the US. Now, that can cause implications across the economy. It can make businesses suffer, it can make people suffer, make the public suffer. But the main implication that will have is it will raise borrowing costs, it will raise the price of things like the US dollar, and it will be negative for businesses, it will be negative for growth, it will be negative for consumer confidence, because if there is a strap for cash, we did see back at the beginning of the pandemic, before the stimulus measures were released, there was huge, massive dollar buying, everybody scrambling around to try and get their hands on some cash, because the liquidity was simply not there. Now, something like that could happen again as we come to the October the 18th if the debt ceiling is not raised. And we can see the negativity that surrounded those comments here as we look at some indices. We come across to the Dow Jones, the US 30. We can see the beginning of this move down to here, 560 points, pretty solid move off the back of that. We look at the Nasdaq. This was this move here. We were already cruising lower, but this was brought on. You see 2% down, 300 points. This move was accelerated off the back of these comments from the Treasury Secretary Janet Yellen. We see across the S&P as well, down a big chunk, nearly 2%, down 80 points at one point, off the back of these comments by Janet Yellen. Now, we did as well have Jerome Powell speaking. He again repeated that they have all but met the tests for tapering, further fueling fears that the central bank will look to taper asset purchases at their November meeting. He did say that the tests for raising rates were higher. More boxes are going to have to be ticked before they begin to raise rates. But even with the taper, they will still be buying bonds into the middle of next year. So, in terms of implications for markets, what that can mean, you'd imagine they will have to raise the debt ceiling. I don't think they can, surely they won't let themselves get into that position where the country has no more money. It just sounds insane. The Federal Reserve, barring any catastrophe with COVID and any more lockdowns, which does not seem likely at this moment in time, you would imagine they will move forward with tapering some of their asset purchases in November. So it is something we're going to have to keep an eye on in terms of implications for markets. Previously over the last 18 months, anytime stock markets sold off, it's just an easy buy. You could blindly step in and just buy the dip easily. Bloomsbury are reporting that investors are buying the dip this morning, but we can see in this chart had a bit of a slow correction. We can see indices are green across the board, so that's probably what they were referring to. But in terms of strong buying that we've seen most other times where we've seen a stock market sell off like this, I think there is a little bit of caution in markets this morning. It remains to be seen how the US decide to open up at 2:30. We'll be watching that with a keen interest, and it remains to be seen in the coming days, weeks and months whether these two factors become a much bigger problem for financial markets.